If you have a federal student loan, you probably have a pit in your stomach just thinking about paying that bill again. I know so many of you have a lot of questions, and frankly, there's a lot of confusion about what the heck is going on. What will these payments look like? How exactly does this new SAVE Income Driven Repayment program work? What about Parent Plus loans? And are we ever going to see the federal student loan forgiveness President Biden promised? Joining me to talk about all of this is the Department of Education Under Secretary James Kvaal. James, thank you so much for your time.
Thanks for having me.
Sure. Okay, I want to start with the biggest issue that is happening, which is after 3 years, people are going to be repaying those federal student loans. I think there has been a lot of confusion about this whole process. So my two-part question here is, do you think the Department of Education has done a good enough job of explaining what's happening to these people? And what would be the Department of Education's number one thing they want people to know as we get into this new phase?
Yeah, I hear a lot of confusion and anxiety from borrowers too. And, it's not a small thing after 3.5 years to figure out how to work student loan payments into your monthly budget. It's going to be a challenge. It's going to take people a little bit of time. We have 5 times more people re-entering repayment in a single month than typically enter repayment in a single year. So there's going to be a lot of strain on our system. It's going to be challenging for people to get the help that they need. We've done the best job we can to get information out. Studentaid.gov is our website, and we explain there everything you need to know. There are 2 things that I want to highlight. One is the SAVE plan is a new repayment plan that we created just a couple of weeks ago.
And we're going to talk all about that in a second, for sure.
Okay, great. And then the second is we've done a lot of work on the loan forgiveness program. So if you're in public service or you have a disability, people weren't getting those benefits before, and we've made it a lot easier. And that's something you should come to studentaid.gov and take a look at what your options might be for loan forgiveness as well.
We were just talking, it's been more than 3 years since people have had to repay these loans. And just this week, we got this report from the Census Bureau about in 2022, sort of poverty's up and, income is down. We just got a CPI and inflation report yesterday. Inflation is going back up. I know there's never a good time to sort of start repaying these loans. But I think a lot of people are struggling right now just to make ends meet. So what should they be doing if they just can't swing a payment?
Yeah, I mean, that's what I hear from borrowers too. I hear a lot of anxiety, a lot of concern. There are people who believe they can't afford it. I think folks should come to studentaid.gov and look at the options that are available to us, to them. The SAVE plan is the most affordable repayment plan ever, especially for people that have high debts or low incomes. Under the SAVE plan, if you make less than about $15 an hour, you don't have to make any student loan payments at all. A higher level if you don't have families to support. And if you do have a family to support. And that's because we think student loans shouldn't come before the basic necessities. But it may not be the best solution for everyone. So come to studentaid.gov, take a look at the options. If you need more help, call your loan servicer, because we do have a lot of benefits that come with a federal loan that people don't take advantage of.
I mean, I think that we've definitely talked, at least I've talked with my followers and subscribers about that, $15 an hour, you have a $0 monthly payment portion of the SAVE program. I think what's more concerning to sort of the masses is that they may be making more money these days than they were maybe when they took over the last few years. But the problem is with inflation and what is going on, they just wouldn't qualify for that, $0 monthly payment, or they wouldn't qualify even for, just based on their straight income, they wouldn't qualify for anything to get that monthly payment down.
Yeah, well, the SAVE plan does cut payments compared to its predecessors by at least $1,000 a year and more for families. It may not be the best option for everyone. We have other repayment plans as well. But it's worth taking a look because choices are better than they were in 2020.
Okay.
Go ahead. Yeah. I was also going to mention we've created what we call the on-ramp to repayment.
Right.
And we know some people are going to need some time to sort out their finances. And so we are suspending adverse credit reporting for the next year. So we're encouraging you to make payments. Interest is accruing, but if you do need a little more time, we're not going to be recording those loans as delinquent to the credit bureaus.
I want to talk real quick, just quickly about the on-ramp program because it is for the next 12 months. As you said, you're not going to be reported to a credit agency if you have a missed, late, or partial payment. I want to just clarify that this isn't another forbearance program. Like people can't, it's not like they can be like, oh, well, I've got an on-ramp program now, so I don't have to pay, correct?
That's right. I mean, payments are due, interest is accruing. Months that go by without a payment no longer count toward forgiveness under public service loan forgiveness or income driven repayment. So we do encourage people to make a plan and get in touch and figure out a situation that works with them as soon as possible. But we do know this is a big transition. We're trying to give people a little more time.
And a quick technical question on that on-ramp program, because I've had a couple of people ask me, what happens, right? The on-ramp program is lasting for the next 12 months. So what happens at the end of that 12 months? Is it like 12 months and automatic delinquency, or what does it look like at the end of that 12 months?
At the end of the 12 months, we're going to bring everybody back to current or less than a month delinquent. And then you get reported to a credit bureau if you're 3 months delinquent. That's the standard rule. So
that is helpful information. Helpful information that I have not seen anywhere yet. So thank you for clarifying that. You mentioned the SAVE program. As you mentioned, the biggest, newest sort of shiny object, this new income-driven repayment program. But I have had a lot of followers and subscribers email me and say, why is it when I go to the SAVE program and I sort of use the calculator to determine what the best option is, why is it that my payment under SAVE is higher than other programs? Is it, I thought, this was supposed to be less expensive.
Well, it's not going to be the lowest plan for every single person. It is the most generous plan overall, and it's especially helpful if you have a high debt or a low income or a middle income. I think there's a couple other things that might be going on. We only finalized the plan a couple of weeks ago, and we're making some further improvements to it next year. So people who enroll in the SAVE plan now should expect to see additional benefits next year. And then,
do they wait till next year?
Well, people's circumstances are different. But we do have benefits now. We have made payments cheaper for everybody in the SAVE plan now. We've implemented benefits on interest accrual now. So it is worth taking a careful look at it now.
Okay. I have absolutely, by the way, videos for those of you watching about what is happening now and what will be happening and what will be available through SAVE next summer. You mentioned interest, and I'm so glad you did, because I think a lot of people are really concerned about the interest. That's all I ever hear people talking about, is this interest is out of control. So the SAVE program, and I'm going to read directly from the website, it says, if you make your monthly payment, your loan balance won't grow due to unpaid interest. So what is that going to look like when they get their bill in the mail? What does that mean?
Yeah, so one thing we've seen in some of our plans in the past is when people are making payments, their loan still gets bigger and bigger because of interest.
Right.
And that is demoralizing. It seems unfair. It constrains people's future options. The reason for that is, you're only paying what you can afford. Under our formula, it could be that you can't afford the entire interest payment. Some cases, interest is so large that even a payment covering the interest is more than a borrower can afford. So under the new plan, if you make a payment, even if it doesn't fully cover interest, we'll forgive that balance of the interest. So as long as you are making payments, you can be assured that your loan is not going to get any bigger.
Well, I want you to say that one more time, because I think that is really a critical part of this. Can you tell me one more time? When they get their bill in the mail and they've made the premium, the loan amount balance, there's another little line that talks about interest. So if they just pay what they owe on the loan, what you're telling me is through SAVE, that whatever that monthly interest is goes away?
That's right. So in a given month, if your payment is $25 and your loan accrues $50 in interest, if you make that $25 payment, we will forgive the extra $25 in interest.
Thank you for clarifying that. I want to talk real quick. just technically, what should people, because I hear this one as well, what should people do about Parent Plus loans? They're not qualified for a lot of this IDR. I mean, there are some IDRs that they can enroll in, but I don't think SAVE is one. So what should parents with the Parent Plus loans be doing?
Yeah, it's a problem. We see a lot of people taking out a lot in parent loans. They do have higher interest rates and fewer benefits than student loans do. So it is an area of concern, and we did include them in the president's $20,000 debt relief plan that was struck down by the Supreme Court. So it's a challenge, and it's one we're looking at. As you mentioned, there are some income-driven repayment plans available to them. These are like the SAVE plan. Your monthly payments are based upon your earnings. So that's something worth exploring. And again, we have this all laid out on studentaid.gov.
You mentioned it right now when the Supreme Court struck down the president's original $10,000 or $20,000 of federal student loan forgiveness plan. That very same day, he came out and said that he was directing the Department of Education to sort of begin the rulemaking process on a new sort of overarching federal student aid or student loan forgiveness program. My question is, we saw a public meeting on this issue back in July, which I covered here on this page, but we haven't heard a lot about it since. And I'm totally, and so is my audience, familiar with the rulemaking process. We talk about it a lot on my page, and I know it's a lengthy process. So my question is where does it stand now? Has it
One of the advantages of, oh, I beg your pardon.
I was just going to say, has it taken any shape yet?
Yeah. So, one of the advantages of the president's plan for $20,000 in debt relief is it was done under the emergency authority, which allowed us to move quickly. And, obviously I disagree with the Supreme Court decision there, but we're not going to give up. And we've launched this new regulatory process. The regulatory process has a lot of steps that are required by Congress to make sure that we carefully consider public input. We did do the public hearing in July that you mentioned. We did that only a couple of weeks after the Supreme Court decision. And we're now in the process of the next stage, which we call negotiated rulemaking. And that's where we sit down with a couple of dozen representatives of the communities that will be affected by the rule. And we share some of the issues we're looking at, the questions we have, and try and develop a proposal together. So we're currently in the process of selecting those people, and then we'll be convening meetings with them in October.
So this rulemaking process is ongoing. It is still in motion, but there is no shape yet to what it may or may not look like. It's not like we can say today that $10,000 or $20,000 would be forgiven under this new rule at this point.
Yeah, that's the nature of the regulatory process, and the expectation that Congress and the courts have for us is that we're going to develop a proposal in consultation with the public. We're going to consider their advice and develop a policy proposal that's as sound as possible. So we do need to take it step by step. I wish it was faster, but the president has asked us to move as fast as we can, and that's what we're going to do.
All right, James, thank you so much for your time this morning. I think this was really helpful.
Thanks for having me on. I appreciate it.
If you want more information about the SAVE program, I will link it in the description box below. And if you want to stay up to date on the new student loan forgiveness program, make sure you sign yourself up for my News Girl News Roundup email. I will also link it below.